A Members Voluntary Liquidation, or MVL, is often known as a solvent liquidation, but is only appropriate where there are sufficient assets to pay all creditors in full and for a distribution to be made to shareholders. An MVL is particularly appropriate when a large reserve of assets has been accumulated and the directors and shareholders wish to retire or simply extract the funds tax efficiently. The key issue in an MVL is that any distributions to the shareholders are treated as capital distributions and therefore are subject to the far more favourable capital gain tax rates. This is particularly relevant when any distribution is eligible for entrepreneurs' relief, which means that any distribution to the shareholders is taxed at 10% as opposed to 45% if it was treated as income. The last few years have seen an increase in MVLs following the tightening up of the regulations under Extra Statutory Concession number 16. It used to be the case that subject to tax clearance, the directors and shareholders could elect for the full distribution of funds prior to the dissolution of the company to be treated as capital distributions. Accordingly, therefore, a formal MVL was not required. While this concession is still available, the total amount that can be distributed is capped to £25,000. If there is more than £25,000 of assets to be distributed, the company must be placed into Members Voluntary Liquidation if the shareholders wish for any sums received to be considered as capital distributions. A further advantage of an MVL is that the assets can be distributed in specie. This means that the assets can simply be transferred to the shareholders as opposed to being sold. This can be particularly relevant if the company is, for example, an investment company holding rental property or shares and the shareholders wish to retain these assets personally. Another benefit of a Members Voluntary Liquidation is that once the liquidation is concluded, the sums distributed to the shareholders are protected. In contrast, if the dissolution route was followed, a creditor could apply to have the company restored within a 20-year period and initiate legal proceedings. One disadvantage of an MVL is that the directors of the company lose control of the company and its assets for a short period. However, in a lot of cases, an immediate distribution of assets can be made. One further disadvantage of an MVL is that notice of the liquidation does need to be advertised in the London Gazette. However, that notice will stress the fact that the company is solvent and all creditors have or will be paid. In summary, an MVL is an extremely quick and easy process to bring the life of a company to an end and extract any assets in the most tax efficient way possible.